Welcome back to Altcoin Insider. Today we are going for a deep, non-nonsense breakdown of Hedera Hashgraph and the HBAR token. We will look at the current price and technical structure, dig into the fundamentals and the latest news, review the Twitter narrative around Hedera, and finally discuss scenarios for the coming months, and my personal view as an investor, not a 5-minute scalper. At the time of this recording, HBAR is trading around $0.105 per coin after showing a noticeable volatility spike and roughly a mid-single-digit daily gain recently. The price is sitting slightly above the short-term moving, averages the 20-day and 50-day, but still below the 200-day moving average, which reminds us that the broader bearish structure has not been fully broken yet. It is a classic picture. Locally, the market is waking up, but globally, we are still working through the aftermath of a long altcoin correction and washed-out optimism. From an indicator perspective, the setup looks neutral to bullish. The daily RSI sits around the mid-range, roughly 50-55, well away from both overbought and oversold zones, leaving room in both directions. MACD still does not show a strong impulsive move. The lines are hugging each other, reinforcing the feeling that the market is coiling before the next directional leg. Key levels, where the real battle is happening. On the daily and 4-hour charts, you can clearly see the current balance shelf. Right now, the market is revolving around the psychologically important 0.1 area, which acts as both support and a launch pad for any potential push higher. Below that, there is a dense demand zone around 0.0890.09, where the lower Bollinger Band and short-term moving averages cluster together. On the upside, the closest meaningful resistance sits around $0.11, which has already served as a ceiling multiple times for both intraday traders and more positional players. A clean breakout and daily close above 0.11 would be the first technical signal that buyers are ready to seize control and open the path toward the next liquidity pocket in the 0.140.16 area. That is where stronger liquidity, long-term moving averages, and previous swing reaction zones converge. What the classic indicators are saying right now, running through the basic indicators, the picture is the following. Daily RSI in the mid-range indicates balance between bulls and bears. This is not blow-off euphoria and not capitulation, but a steady market choosing direction. MACD gives more of a wait-and-see message, where the potential for a bullish crossover is there, but has not yet transformed into a clear impulse. According to Bollinger Bands, HBAR's price is leaning towards the upper part of the band, but not breaking out above it, suggesting buyers are gently pushing the market higher while still being far from manic overbought conditions. At the same time, fast oscillators such as stochastic RSI and CCI periodically slip into overbought on lower timeframes, hinting that short-term pullbacks are very possible even inside an overall constructive setup. Let's break this into 3 clear scenarios so you do not get married to a single perfect outcome. Bullish scenario. In this case, HBAR holds the 0.102 region as an accumulation base and breaks above 0.11 on rising volume. A confirmed move and daily close above 0.11 opens the door toward the $0.140.16 range, which lines up with multiple short-term forecasts and key moving average resistance. For this scenario, you want to see volume expanding above the current 24-hour average and RSI pushing into the 60-plus zone without glaring bearish divergences. Neutral scenario. Here, the price chops between roughly 0.09 and 0.11, harvesting liquidity and stop hunting both longs and shorts. That kind of range is ideal for market makers and larger players who gradually build positions while retail grows tired and loses interest. This can last for weeks, with news coming out but the market only truly reacting to the strongest catalysts. Bearish scenario. In the negative case, price fails to clear 0.11, breakout attempts come on weak volume, and we see a slow drift back towards 0.09 with occasional fake bounces. A decisive break and close below 0.089, 0.09 opens the way toward deeper demand zones, where longer-term believers view HBAR as a blue-chip altcoin and treat those lower prices as a gift from the market. In that scenario, the 5-6x upside from cycle lows still exists, but the timeline stretches and investor patience gets tested again. External forecasts, where the broader consensus sits. Looking at external forecasts, many analytical platforms cluster around the idea that a short-term target around $0.11 is reasonable on a weekly horizon. On a slightly longer horizon, roughly the next month, the 0.140.16 range shows up repeatedly, both in standard technical analysis and in algorithmic models that rely on historical volatility patterns. A particularly interesting piece is the sentiment mix. Some models show up to 90% bullish technical signals for HBA, specifically, while the broader crypto fear and greed index still sits in deep fear. That means HBAR's own setup is improving, but the average retail investor remains afraid and underexposed, which can create a window for patient accumulation. Fundamentals. Hedera as a corporate blue-chip altcoin. On the fundamental side, Hedera is not a typical lone blockchain story. It uses a Hashgraph-based consensus algorithm, delivering high throughput, finality in seconds, and an explicit focus on enterprise and institutional use cases. This is not a project selling a meme of revolutionizing decentralization. It is infrastructure that real businesses can plug their processes into. A key part of the Hedera narrative is its governing council, which consists of major global corporations. Very recently, FedEx, a global logistics giant with over 16 million packages per day and more than 500, employees officially joined the Hedera Council, committed to running a node and holding equal voting rights alongside members like Google, IBM, Dell, and others. FedEx has explicitly stated its intent to use Hedera to modernize supply chains, streamline cross-border documentation, and reduce friction in global commerce. Network upgrades and technology progress. In terms of raw tech, Hedera continues to roll out mainnet upgrades, including a recent V0.7x series upgrade around February with a short maintenance window and performance optimizations. These regular upgrades are about more than just version numbers. They reinforce that the team is focused on real-world performance, scalability, and resilience under enterprise-grade workloads. The network has already seen billions of dollars in tokenized real-world asset, RWA settlement volume, and is positioning itself as a trust layer for institutional finance and AI-driven use cases. Council members and ecosystem partners are experimenting with everything from supply chain tracking and carbon markets to digital ticketing and AI governance tooling on top of Hedera's hybrid architecture. Twitter and community sentiment. On the social side, especially Twitter and Reddit, HBAR has a loyal core of long-term holders and evangelists who have sat through multiple drawdowns from all-time highs. Community sentiment is mixed. Some posts highlight that HBAR is structurally setting up for a bullish 2026, while others complain about TPS expectations, liquidity, and the slow pace of price recovery compared to meme coins. At the same time, several notable traders and commentators have once again started calling HBAR a slow but attractive accumulation play at current levels. Their logic is simple. We are back in regions from which HBAR previously delivered multi-X moves. The fundamentals have improved, council membership has expanded, and use case volume is growing. Tokenomics with a large maximum supply remains a concern, but in a full-blown altcoin bull market, Real usage and institutional flows can overshadow pure supply fear, especially if circulating supply is already approaching the mid-80% range. Investor lens: HBAR as a conservative alt for the next cycle. If you stop thinking like a day trader and shift to a multi-year investor's lens, HBAR's picture becomes calmer and more attractive. Hedera is one of the few networks explicitly designed around enterprise-grade infrastructure, real corporate partners, and regulatory-friendly governance, rather than purely speculative narratives. That path is slower and often boring from a price-action standpoint, especially while the market chases meme rotations and short-lived narratives. However, historically, these boring infrastructure plays often end up as quiet winners of the cycle, absorbing capital from participants who are tired of getting liquidated on high beta trash. From a risk-reward standpoint, a 5-6x potential move from well-defined accumulation zones into the next phase of institutional adoption is a reasonable profile for a mid-as-you-owe to long-term portfolio allocation, assuming the fundamental thesis continues to play out. Trade logic, entry, invalidation, targets. Bringing this back to actionable structure, a rational accumulation zone for HBA sits roughly between 0.095 and 0.102, where price is currently consolidating and indicators show a balance between supply and demand. In that band, a laddered entry makes more sense than going all-in scaling into the position and keeping dry powder for any sharp liquidity flushes toward lower demand zones. A sensible medium-term invalidation level for that thesis would be a breakdown and sustained close below roughly 0.085, which would signal that the current local upstructure is being lost and a deeper correction is underway. On the upside, initial profit-taking zones are around 0.14, 0.16. Aligning with multiple short-term and monthly forecasts before any more ambitious cycle-level targets in the 0.25 plus and beyond region come into play. Fresh 2026 context: FedEx Council strength and community calls. Zooming in on the very latest developments, there are a few key 2026 catalysts you should be aware of. First, FedEx officially joined the Hedera Council in mid-February 2026, will operate a node, and gained equal voting rights alongside other major members such as Google, IBM, Dell, LG, and Deutsche Telekom. For a logistics behemoth with roughly $90 billion in revenue and operations in over 220 countries, this is a substantial real-world signal, not just a marketing headline. Second, 2026 has already seen a wave of ecosystem updates, mainnet upgrades, expanding RWA pipelines, enterprise deployments like Tata Communications and Americatwo 150, and new collaborations involving big tech names for AI-focused factories on Hedera. The narrative forming on Reddit and Twitter is that 2026 might be the year when years of planning, regulation, testing, and implementation start converging on visible, measurable adoption. Third, on February 26, 2026, Hedera is hosting a community call recapping Hedera Dev Day and ETH Denver takeaways, with ecosystem projects like Dovu and others in attendance. This type of regular, developer, and community-oriented call may not pump the price instantly, but it helps maintain momentum, align expectations, and showcase what is actually being built on-chain. Ending: how to think about HBAR from here. So let's wrap this up in a way that gives you a clear mental model for HBAR at this very moment in the market. On the technical side, you have a relatively well-defined structure. A short-term decision zone around 0.1, 0.11, critical support in the 0.09 area as a controlled accumulation region, and a realistic near-term upside toward 0.14, 0.16 if the bullish scenario plays out over the next few weeks. On the fundamental side, Hedera keeps doubling down on being serious, enterprise-grade infrastructure. Real-world companies from telecom to logistics, including heavyweights like FedEx, are not just slapping their logos on the website, but actually joining the council, running nodes, and wiring Hedera into their operational stacks. At the same time, the ecosystem is leaning hard into real-world asset tokenization and AI-related infrastructure, with over $10 billion in RWA settlement and a growing pipeline of enterprise use cases that treat Hedera as a trust layer for the next wave of institutional finance. Sentiment-wise, the situation is almost ironic. HBAR's technical models are skewing strongly bullish, while the broader crypto market is still dominated by fear, which historically tends to reward those who think in cycles instead of in days. This is still a high-risk asset class with zero guarantees. What you have are probabilities, scenarios, and your own discipline around entries, stops, and profit-taking. For me personally, HBAR right now fits the profile of a conservative altcoin for the coming cycle, not the one that tanks in a week, but the one that can quietly compound into a 5-6x move from accumulation zones if the pieces around corporate adoption, RWA, regulation, and infrastructure keep falling into place the way they are in early 2026. The key is to size it like an altcoin, not like a government bond. Respect the volatility, plan your risk, and let the thesis play out over time instead of trying to force the market to move on your schedule. Thanks for watching this deep dive into HBAR on Altcoin Insider. If you found value in this breakdown of the latest data, technical picture, fundamentals, and social narrative, consider liking the video, sharing your own HBAR targets for 2026 in the comments, and telling me which scenario you are personally playing. Patient accumulation, level 2 level trading, or sitting this asset out entirely. This is Altcoin Insider. See you in the next videos, where we will break down other candidates for infrastructure winners of the next crypto cycle.